Transmart is a question. It was one or other test or exam question. I think it was an exam question one or other time. And it's really a good question to test whether you understand the whole concept of depreciation, how to calculate depreciation, and how to account for change in estimate. So it's really a good exercise to do. I would strongly recommend that you do this one in detail without cheating and looking at the answer before you haven't done it in total. Now let's assume a VAT rate of 14%. It's a company that provides excellent courier services across South Africa. Since its incorporation in 2010, guys, incorporation is when a company starts to operate. That is the date that they actually start with operations. And they have to register, so it's an official date that is registered with the so-called CIPC. The entity has grown rapidly. Transmart is known for providing great client satisfaction as its senior management focuses mainly on continuous service improvement. It is a registered value-added tax vendor and the financial period ends the 31st of December. From a financial viewpoint, the entity has invested most of its funds in obtaining adequate and reliable transportation vehicles in order to ensure that the courier services are rendered timelessly and efficiently. Transmart owns two different types of transport: delivery vans and small commercial aircrafts. The following extract explains the accounting policy that is applicable. Now, the first one is delivery vans are depreciated over the useful life of 5 years on the straight line basis with no residual value. Then small commercial aircrafts are depreciated over the total kilometers traveled. It is estimated that each aircraft can travel 2.5 million kilometers. So clearly, this is the production unit method. There's also no residual value. Production unit method, so I will work out a depreciation charge per kilometer, and the total capacity of each aircraft is 2.5 million kilometers. Good, then Transmart purchased its transportation assets from auto traders via electronic fund transfers. The summary of the below indicates the assets held. Now, asset type, delivery van A and B, there's the number plate and the cost inclusive of VAT. Now, obviously, we are not interested in the VAT inclusive amount. What we are interested in is in the VAT exclusive amount. So immediately, if we take out 14% VAT, it means then that, let me just put this one, no color, 100,000 was the actual cost price of delivery van B, A. Delivery van B, if I take out the 14% VAT, the actual cost price was 120,000 Rand. And there's the date of purchase as well. Now, if we look at the aircrafts, aircraft 1, 547,000. So if we take out the VAT, we can work with 4.8 million. If we talk about the next one, the aircraft 2, 808,000, that is 7.2 million. VAT exclusive. That is what we are going to work with. And the last one, aircraft 3, equals VAT exclusive 6.4 million Rand. 6.4 million Rand. So that's the actual cost price. So whenever you get a question like this and you have identified that these costs include VAT, you know that the cost price of an asset is VAT exclusive if we are a VAT vendor, and we are indeed a VAT vendor. So immediately before you start doing any calculations, take out the VAT so that you work with the actual cost prices and you don't forget to remove the VAT. And also here the date of purchase. Then additional information. They tell us that aircraft 1 was disposed of on 31 December 2015. Now it's important to know where are we in this whole game plan. Prepare the journal entries that should be processed with regard to delivery vans for the year ended 31 December 2016. So we are that's our financial year end, 31 December, and we are at 31 December 2016, and we have to disclose the change in estimate note for the light aircraft for the year 31 December 2016. So if we did dispose, where are we? Aircraft 1 was disposed of on 31 December 2015. It means that we don't worry what the particulars were for aircraft 1, because that was already in the previous financial year, so we can scratch it out. We're not going to work with that. We should have already, and we did, we can assume that we've accounted for the disposal of that aircraft last year. During the year ended December 2016, now that is the year that we're interested in, senior management indicated that the accounting estimates as stated previously should be altered. The following new accounting estimates were provided. With regard to the delivery vans, it was determined that the vehicles could only be used for a total of 4 years. It was indicated that the change in accounting estimate relating to the delivery vans will be recorded by applying the cumulative catch-up method. And then the question goes on, and then it's all about the small aircrafts. No depreciation has been recorded for the current year. The South African Revenue Services indicated that we can claim VAT on the vehicles as well as the aircraft, and no other assets were purchased during the year under review. Number 8, prepare the journal entries that should be processed with regard to the delivery vans for the year. And now they don't want anything else. They don't want the IAS 16 note. They want general journal entries. And if you've done anything else but general journal entries, then you would have received a cool round 0, even if you've done the calculations that is required for a change in estimate, because you didn't answer the question. The question asks you general journal entries, and yes, you will have to do a couple of calculations in order to derive at what is the numbers associated with the general journal entries. But guys, it is of the utmost importance that you answer the question, and the question is to do journal entries for the delivery vans. So let's go and check out the delivery vans first. Our old accounting policy was a useful life of 5 years on the straight line basis with no residual value. Our new policy is the deliveries will be used for a total of 4 years. Still no residual value. We have to do the cumulative catch-up method, so therefore we have to start all the calculations from 0. So we go back, we reset the button, we start all over again. Good. We have 2 delivery vans. The first one is delivery van A. We bought it at a cost price of 100,000 as at 1 January 2014. Now, we've said that in all these calculations where there's a change in estimate, our first port of call is what was the carry value of the asset at the beginning of the year. So let's quickly go and let's determine what was the carry value of the asset at the beginning of the current financial year. Now here was the vehicle A. The cost price, when I took out the VAT, was 100,000 Rand. I have bought that asset on 1/1/2014. So that means that I've written off depreciation for 2014 and 2015. Remember, we are now in the 2016 financial year. So this is 2 full years that we have depreciated the asset over the lifetime of the asset of 5 years. 100,000 divided by 5 gives us 20,000 multiplied by the 2 years. So up to the beginning of the current financial year, we have written off 40,000 Rand of depreciation. Now, under the new method, they tell us that we are going to depreciate the assets now over a total of 4 years. So if we did write down depreciation based on the new estimate, remember it's cumulative catch-up, so we go back to the acquisition date of the asset and we apply the new estimate since the acquisition date of the asset. So if we divide 100,000 divided by 4 years now, it gives us 25,000 Rand per annum. We have used that asset for 2 years. So in total, our accumulated depreciation would have been 50,000 up to the beginning of the current financial year. Our actual carry value of that delivery van A is 60,000 Rand in our books, but if we do apply the new estimate, it would only have been 50,000. So cumulative catch-up says we have to rectify the sins of the past. We know that our accumulated depreciation is 40,000 Rand, but in actual fact, it should have been 50,000 Rand. So the first thing that we have to rectify is the catch-up, the sins of the past. So the sins of the past says we have provided 10,000 Rand too little for depreciation. So we have to bump up our accumulated depreciation with 10,000 Rand. First part, remember cumulative catch-up. Our current year's depreciation consists out of two components. The first component will be the catch-up, and here we have to increase accumulated depreciation. So our expense account depreciation will be debited and accumulated depreciation will be credited with 10,000 Rand. Okay, now they only ask from us, and the only requirement is to do the journal entries for the delivery van. So therefore, I'm not interested in all kinds of future depreciation, things like that. I want to determine basically my current year's entries, and that will be my current year's depreciation. So therefore, for the current year, we're also going to have normal depreciation based on the new estimate of 100,000 divided by 4 years, which is 25,000 Rand. So what is the total depreciation that we're going to pass for delivery vehicle A? 10,000 plus 25,000, which gives us then 35,000 Rand. Now the delivery vehicle B. Delivery vehicle B had a cost price of 120,000. We bought this on the 1st of July 2014. So how many months since acquisition? There is now 18 months since acquisition up to the beginning of the current financial year. So our accumulated depreciation up to the beginning of the current financial year would have been the 120,000 divided by 5 over a 5-year period based on the old way, multiplied by 18 months, which gave us total accumulated depreciation in our books of 36,000 Rand. Based on the new estimate, we are going to write off the asset over 4 years. So we start right at the acquisition date once more. The cost price of the asset is 120,000. We're going to depreciate it over a 4-year period multiplied by 18 months, and that will give us accumulated depreciation up to the beginning of the current financial period if we did apply the new estimate since the acquisition date of 45,000 Rand. So, in our books, what is the carry value of our assets? The carry value of delivery van B is 84,000 Rand. If we apply the new method, we actually wanted that depreciation to be, of that carry value to be 75,000 Rand. So opposed to an accumulated depreciation figure of 36,000 that is currently lying in our books, we actually wanted a 45,000 Rand. So therefore, we're going to increase our accumulated depreciation then with 9,000, and that is to rectify the sins of the past. So that means that that 9,000 Rand equals our catch-up on delivery vehicle B. What is our current year's depreciation now? 120,000 divided by 4, which gives us 30,000 Rand per annum. So the normal depreciation, 30,000. What is our total depreciation on delivery vehicle B? The 9,000 catch-up plus the 30,000 normal depreciation, so 39,000 Rand. So if you take 39,000 Rand plus 35,000 Rand, that gives you a total depreciation for the current year of 74,000. Broken down in the two components, catch-up, 10,000 and 9,000, which is 19,000. Current year's depreciation, 25 and 30, which gives you 55,000 in total. So total depreciation, 74,000. So although your journal entry is just a simple journal entry 2-liner item, there's a lot of calculations behind that journal entry. And I'm telling you now once more, for all your effort here, you would have received not one single mark if you didn't even make an attempt to write down a journal entry, because the question didn't ask you the calculations. The question asked you what was the journal entries that has to be passed. So the expense account depreciation would have been debited with a 74,000 rand, and accumulated depreciation on the delivery vans would have been credited at 74,000, and remember your statement indication. Now the big part of the question is all about the aircraft. Disclose the change in estimate in regards to the light aircrafts. Now guys, you don't bother with the delivery vans. It's not requested, it's not required, it's not asked. All they want is the change in estimate regarding the light aircrafts in the notes to the financial statements for the year ended 31 December. Comparatives are not required. You know that usually in that note we have to provide there you are, it looks better. We have to provide comparative figures. Good. So now we're back to the aircrafts. They gave us the information on the aircrafts, and they said we've already established that the aircraft one we don't have to bother about because it's not part of the fleet anymore. Aircraft 2 had a cost price of 7.2 million. Aircraft 3 had a cost price of 6.4 million. Now, how have we changed our accounting policy? Our accounting policy used to be that small commercial aircrafts are depreciated over the total kilometers traveled. It's estimated that each aircraft can travel 2.5 million kilometers with no residual values. With regard to small aircrafts, it was estimated that each aircraft could only travel a total of 2 million kilometers now. So opposed to the 2.5 million, it's now only 2 million kilometers. In addition, small aircrafts will now be depreciated to an estimated residual value of 100,000 Rand exclusive of VAT. Your residual values must always be in a VAT exclusive amount. So in the past, what was our old? It was 2.5 million with no residual value. Now it's 2 million kilometers with an expected residual value of 100,000 Rand. Good. And for that change in estimate, we have to apply the reallocation method. So what is the reallocation method? The reallocation method says my starting point is my carry value of the assets as it's beginning of the current financial year. And then I'm going to apply my new estimates only on the carry value as at the beginning of the year. So I start at the current financial year and I work forward. I forget about the sins of the past. I forget what happened in the past. I'm not interested. Let bygones be bygones. We start fresh in this year and we're going to apply the new estimate on this year's figures. So our opening balance will be our carry value of our aircraft in the beginning of the year. Aircraft 1 is out of the books. So we are not interested in aircraft 1, and let's scratch it out because we are not going to work with that. Aircraft 2, kilometers traveled during the year ended 31 December 2014, 50,000 kilometers up to the beginning of the year, a further 270,000. So in total, we've traveled 320,000 kilometers. So the first thing that we have to establish, what was the carry value of the aircraft as at the beginning of the current financial year? Aircraft 2, we said that the cost price was 7.2 million Rand. There on top, 7.2 million Rand. Then we've also established that we have to write off depreciation over the total number of kilometers. It used to be 2.5 million, and we say that in 2014 we have traveled 50,000 kilometers, and then in 2015 270,000 kilometers. Guys, you could have added the two together because that would have given you your total accumulated depreciation. And for aircraft 2, I've done it separately so that you can see exactly where the figures are coming from. Cost price divided by the old capacity of 2.5 million kilometers multiplied by 50,000 kilometers traveled in 2014 would have given you depreciation in 2014 of 144,000 Rand. Depreciation in 2015, again, 7.2 million, the cost price, divided by 2.5 million kilometers multiplied by the 270,000 kilometers traveled. That gave you accumulated depreciation for that year of 777,600. Obviously, at the end of 2015, the 144,000 plus the 777,600 was lying in accumulated depreciation. Now, my cost price less my accumulated depreciation would have given me my carry value of aircraft 2 as at the beginning of the year, which was 6,278,400. Now, if we did carry on with the old way of providing for depreciation, what would our depreciation have been in the current year? Again, the 7.2 million cost price, less the previous old capacity of 2.5 million, multiplied by the number of kilometers traveled in the current year, which was 160,000 kilometers. That would have given us 460,800. At the end of 2016, the carry value, if we did continue in the old way, would have been 581,760. Now remember, we have to disclose the impact of the change in estimate on future profits. So therefore, we have to establish how much depreciation based on the old method would we have written off after 31 December 2016. And because there was no estimated residual value, we would have written off the full amount of 5817 carry value up to the end of the lifetime of the asset. Good. Now this was a change in estimate. So where do we start? We start at the carry value as at the beginning of the year. There's the new method. That's our starting point, 6,278,400. Under the new estimates, we've said, well, now we're only going to have 2 million kilometers and an estimated residual value of 100,000 Rand. So we're not going to write down in future the full 6,278,400. Our depreciable value will be the 6,278,400 less the estimated residual value of 100,000. Now remember, because we start only at the beginning of this year going forward, we cannot now divide it by the total number, the total capacity of 2 million kilometers. Why not? Because we have already traveled 320,000 kilometers. So as from the beginning of 2016, there is no 2 million kilometers left anymore to travel. Therefore, we have to deduct this 320,000 kilometers that we've traveled in the past from the 2 million, because what are we looking for? We are looking for the remaining capacity as from the beginning of the current financial year. I want to say that again. We are looking at the remaining capacity as from the beginning of the current financial year. So the remaining capacity is our new estimate of 2 million, less the 50,000 Rand travelled in 2014, less the 270,000 kilometers travelled in 2015, and that is the remaining capacity. And that is going to be our rate per kilometer. And that we're going to multiply by the number of kilometers travelled in the current year, which is the 160,000 kilometers. So multiplied by the 160,000, and that gives us our actual depreciation charge for the year of 588,419. Now we can immediately establish what is the impact on current year's profits, because we are going to pass a depreciation expense of 588,419. If we did continue with the old way, we would only have passed 460,800 Rand as a depreciation charge. Therefore, it's going to have a negative impact on our profits, which is going to be the difference between the two of 127,619. Good. Now, based on the new estimate, what is our actual carry value of the asset going to be at the end of the period? 565,981. To what value are we going to depreciate aircraft to under the new estimates? Only up to the estimated residual value of 100,000. So therefore, the depreciable amount as at the end of the current financial year is not going to be 5,659, but it's going to be 5,589,981. So that is the amount that we're going to write off as future depreciation on aircraft 2, opposed to the old figure, which was 5,817,600. So clearly under the new estimates, we're going to write off less depreciation in future. So therefore, it's going to be a positive impact on my future profits. Now we're going to do basically exactly the same thing for aircraft 3. Aircraft 3 had a cost price of 6.4 million rand. Up to the beginning of the current financial year, we have already travelled 500,000 kilometres. So if we want to determine the carry value of aircraft 3 at the beginning of the year, we're going to say the cost price of 6.4 million divided by the original capacity of 2.5 million kilometres multiplied by the number of kilometres travelled up to the beginning of the current financial year. That is the 150 and the 350. And that would have given us accumulated depreciation as at the beginning of the year of 307,200. So our carry value of aircraft 3 as at the beginning of 2016 would have been then 5,120,000. If we did continue with the old way, what would our depreciation charge have been in the current financial year? Again, the cost price 6.4 million, the old capacity divided by 2.5 million kilometres, multiplied by the number of kilometres driven or flown this year of 120,000 kilometres. So multiplied by 120,000. So based on the old way, the old estimates, we would have had depreciation in our books this year of 307,200. If we did continue, the carry value of the asset would have been at the end of the year 4,812,800. How much depreciation would we have written off this aircraft in future? Well, there was no estimated residual value, so we would have written off the full amount, which was still lying in our books, so we would have written off 4,812,800. Based on the new estimate, on the reallocation method, what is our starting point? Our starting point is our carry value at the beginning of the year. Now we're going to apply our new estimates on the carry value on the beginning of the year. We're going to take that 5,120. Our new estimated residual value is 100,000, which we're going to deduct from the carry value of 5,120, divided by the remaining capacity. Now our new capacity equals 2 million kilometres, but we have already travelled 500,000 kilometres. So the remaining capacity as from the beginning of the current financial year is only 1.5 million kilometres. So we're going to divide it by 1.5 million kilometres, and we're going to multiply that by the number of kilometres driven in the current financial year, which is 120,000 kilometres. Right. That is going to give us our actual depreciation charge for the year, which was 401,600. Now you can see here under the new method, we're going to pass a depreciation of 401,600. Under the old method, it would only have been 307,200. So it will be a negative impact on our profits of 94,400. The difference between the two, our expense is going to be higher under the new method than what it would have been under the old method. Our carry value in our books at the end of 31 December 2016 is in actual fact now going to be 4,718,400. Remember guys, nothing changed with our cost price. Our cost price is still 6.4 million. What is our accumulated depreciation now? Our accumulated depreciation is now the 1,280 plus the 401,600. And that will bring us to a carry value at the end of the year of 4,718,400. Up to what value are we going to depreciate this aircraft? Up to 100,000 Rand. So how much depreciation are we still going to write off from 2017 onwards? Only 4,618,400. So future depreciation under the new estimate is going to be 4,618,400. Under the old estimate, it would have been 4,812,800. So therefore, it will be a positive impact on our future profits of 194,400. Now we've got all our information and we can actually do our note. Notes of the financial statements of Transmart Limited for the year ended 31 December 2016. And in actual fact, here is a mistake because that should have stand there on its own. And I have to do that correct. Transmart Limited, notes to the financial statements for the year ended 31 December 2016. Good. And let's save it. Profit before tax, 2016 Rand. Profit before tax was calculated after taking the following into account. Depreciation. Now this is depreciation on the aircraft. Depreciation on the aircraft. Okay. Total depreciation. Let's have a look. We have calculated that. Total depreciation for aircraft 2 would have been our 588,419, and for aircraft 3 would have been the 401,600. So that is what's going in the top total because that's the actual expense. Now, based on the original estimate, what would it have been? The original estimate, aircraft 2, we would have written down 460,800 on aircraft 2, and we would have written down 307,200 on aircraft 3. So that would have given us 768,000. Now to get the 768,990,019 means that we had to add 222,019, which is the impact of the change in estimate on the current year's profits. So let's go and check whether that actually works out. We said that there was a negative impact of 127,619. Why negative? Because it increased our depreciation charge. And here was also a negative impact, so it also increased the depreciation charge with 94,400. So minus 127,619 minus 94,400 give us an increased depreciation of 222,019. So I'm happy with my calculations. Then you also have to write a change in estimate note. During the current year, there was a change in estimate with regards to depreciation due to a change in the total estimated number of kilometers, changing from 2.5 kilometers to 2 million kilometers per aircraft. As well as a change in the residual value from no residual value to a residual value of 100,000 Rand per aircraft. The effect on the current year profit is a decrease. There you can see depreciation increased as a result of the change in estimate. So it's a decrease in profits of 222,019. Future profits will increase by 422,019. How did we get to that figure? Well, this is the figure that we've actually worked at here. That was the 227,619 plus the 194,400, which gave us the 422,019. Very good question. Please do this question in detail. You will not be sorry.